Remember, according to Bloomberg, 8 out of 10 businesses crash and burn in the first 18 months. The primary reason is they run out of cash. Warren Buffett says that the language of business, and make no mistake about it, running a self-storage facility is owning a business. Warren Buffett says that the language of business is accounting. For me, that is a scary thought, because when I got into the self-storage business, I didn't really know what I was looking at when I was looking at profit and loss statements, balance sheets, cash flow statements. Let's talk about the balance sheet today and what surprising information you can actually get off a balance sheet. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Quick Start Academy. And what I do is I support the small investor who wants to get in the self-storage business or who wants to grow their self-storage business, do so in a strategic way that creates true wealth and a fulfilling career. And this is being recorded in the fall of 2021. In October, early October, 8th and 9th, there will be a virtual online boot camp. Now, what this boot camp is designed to do, we go through a 4-phase strategy where no matter where you are in your understanding of self-storage, even if you're just a beginner, we go all the way through the whole process, all 4 phases of putting your first self-storage facility into service. If you'd like to find out more about it, there'll be a link in the comment section of this video or online. If you're reading this at creatingwealththroughselfstorage.com, there'll be a link there. I want to talk about balance sheets today. They were a big mystery to me. I still don't have as powerful a relationship as I may be able to create for myself, but I sure get a lot more information off a balance sheet than I used to. Now, I have no formal education in accounting. In fact, I'm the guy that in high school, my 10th grade teacher passed me in algebra only if I promised never to take another math class unless I absolutely had to. But when I got in the self-storage business, I was using other people's money. So I realized I had to learn fast and I had to get good at being able to read financial statements. Now, episode 304 is about what a P&L tells you and doesn't tell you, which I found surprising. And then 305 is an episode on how you can actually track your cash and your cash position, which I never received from an accountant. It's called the cash flow report. You ask for financials, you'll get a balance sheet and a profit and loss statement. Very little information on there on those two is about how much money you actually have. Those two are about profits because taxes are derived from profits. But as a business owner, we all know cash is what we need to be tracking. If you haven't watched those, I'd recommend doing so just so that this episode's in a little better context. So let's review real quickly. What does the profit and loss statement talk about? It doesn't talk about cash. It talks about profits. And to be really clear, it talks about the theory of what your profits are. Now, the cash flow statement actually talks about the cash or the money in your business. And there were 3 types of money. And what a cash flow statement does is track all 3 of those in a given time period. If you remember, the profit and loss statement is like a snapshot. If you're looking at a month-end profit and loss statement, it's a snapshot on the theory of the profits of your business at 11:59 on the last day of the month. The cash flow statement is more like a movie. It is a movie of how the cash moves through your business, not your profits, totally separate thing. Profits and cash are not the same thing. You can't spend profits. You can only spend cash. You can only pay your bills with cash. You can't pay your bills with profit. The cash flow statement is like a movie of the cash flowing through your business over a given time period. Now, if the P&L is about profits and the cash flow statements is about cash or money, what is the balance sheet about? Well, I didn't know for the longest time. Really, the balance sheet is about things and stuff. So it turns out every business has things and stuff in the business. What are they? Well, in the self-storage business, obviously we have the building itself. That's a thing, isn't it? Very often you'll have fencing around your building. Fencing's a thing. Your gates opening, that's a thing. And it turns out you also have stuff. So let's say we're looking at a balance sheet at 11:59 on the last day of the month, and it says operating account $35,000. That's stuff. You have $35,000 in that account at that particular moment in time. Well, at 12:01, a minute or 2 minutes later, after that balance sheet's over, if you're on first of the month, your customers owe you rent or owe you money. If you're on anniversary date, it's whatever date they moved in, they owe you money. Well, according to the CPAs and the accountants, that's stuff too. That's called accounts receivable. Then, when your customers pay you your rent, that stuff moves from the accounts receivable line up to the cash in the bank account stuff line. Now, you sell retail items, that stuff I rail about all the time, how to get extra money in your business, selling retail items, well, that's stuff too. That should be on a balance sheet. And in accountant speak, or accountant's language, there's 4 main categories of stuff. There's cash, there's accounts receivable, there's inventory, and there's what they call PP&E, property, plant, and equipment. Those are the 4 main categories accountants will kind of lump your things and stuff into. And all that should be or is on your balance sheet. Now, I finally figured out when I'm looking at a balance sheet that of all the things and stuff, you either own them or you owe on them. So what would you owe in your business? Well, you owe your property taxes, don't you? You also owe your light bill and your insurance bill. You owe employment tax and unemployment and tax when it's due. All those things you owe. Some of the things we owe, accountants will call accounts payable. Some of the things we owe, accountants will call them liabilities. So accountants will create like long-term liabilities, like the mortgage on the storage facility. That's usually a long-term liability. I guess the difference between liability and accounts payable, you owe them both, but I guess the difference is one has interest and the other doesn't. Perhaps that's it. It really doesn't matter to me. It's all just stuff we owe. So, in essence, here's what a balance sheet looks like. Now, accountants say we own our investment. That's the money we use to invest in buying or starting a facility. We own our profits. Thank goodness. They call those earnings. So, according to accountants, we own investment and we own earnings. I guess it's a good thing we own our profits. In some countries or in other times, I guess we don't necessarily own our profits. Now, what's cool about this graph is things and stuff equals what we owe and what we own. At least I think that's cool. So I guess that's why they call it a balance sheet. So I would much rather they call it a things and stuff sheet, but it's called a balance sheet. So let's look at this. Here's where the balance sheet first finally began to make sense for me. Let's say that your things and stuff equals 10. You owe 8. What would you own? Yeah, you guessed it. That's right. You are way ahead of most small business owners in understanding a balance sheet. Now, in CPA language or accountant speak, they call the things and stuff, they call those assets. They call what we own of those assets as equity, and they call what we owe of those assets liabilities. That's really what a balance sheet is. The balance sheet is a snapshot in a moment in time of the things and stuff you own in your business. The profit and loss statement is a snapshot in a moment in time of the theory of the profits of that business, and your cash flow statement is a movie over that time period of how the cash moved in and out of your business. Now, one more thing about the stuff you own. You own your profits, right? Well, it turns out, to make things complicated, there's two types of profit. There's the profit on your P&L, right? Remember the theory of your profit? Well, you own that. And that shows up on your balance sheet as something you own. So let's say you're looking to purchase a facility and you're looking at the balance sheet at the end of the year, which shows up as profits, or the profits that facility, not the cash, but the profits that facility generated over the past year, right? However, there's also another kind of profit. There's profit that you haven't taken, that the company has earned since its creation. That also shows up on the balance sheet. That shows up under a line item called retained earnings. Those are profits from previous time periods that haven't been taken. So when you pay your investors or you pay yourself from the profits, those are called dividends. If you decide not to pay your investors or to pay yourself, they stay on the balance sheet as retained earnings. Now, I bet you can look at a balance sheet at this moment and get way more information than you did before this episode started. Now, let's take a look at something. Let's look at two different companies. Now, they're not alike, are they? Why? Are their assets and liabilities alike? Which company would you rather invest in, or which company would you rather buy? Company one can turn a 40% profit on their assets. Company two can turn less than 0.5% profit on their assets. But I bet company's two assets are worth a lot more than company one. Which company do you think is worth more? Which company's better run? Now, can you begin to see something from those fictitious companies' balance sheets that you couldn't see before? It doesn't matter what business you're in. The success of a business and what you do when you buy or build a self-storage facility is you're buying assets and you're And how well that company does is a function of how well you can turn those assets or those capital items that you purchase into profits and income. That's all the self-storage business is. You're buying buildings to generate profit and income. Which one of those companies were better at creating profit? Which one's worth more? Now, ultimately, my goal of these 3 episodes is that you can now begin to look at the numbers on financial statements, turn them into language, from numbers to a story. Once you can turn numbers into a story and figure out what's going on, then you can make assumptions of, if I did X, Y, and Z, if I build more self-storage, will I be generating more profit, a larger percent of profit? What if I didn't build more storage but just raised my rents? How would that affect it? What if I built parking instead of more storage? How effective would I be at turning those assets into operating income and ultimately profits? And you can also begin to see how the 3 different reports tie into each other. On a cash flow statement over a given time period, our cash position either went up or it went down. Either way, the cash flow statement shows exactly what you started with, how much came in, where it all went, what type of expenditures you had, and what you have left at the end of that time period. Now, once you can turn numbers into a story, then you can begin to take action. That's the point of these 3 episodes. To give you dials and levers in your business, or to be able to create dials and levers in a business you're looking at that will tell you what needs to happen if you buy that facility. So really only about 10% of businesses succeed. And only about 10% of business owners really know how to read a financial statement. I wonder if there's a connection. Let's be part of that 10%, because you are in a business that generates a lot of cash. And if you can use the financial statements to your advantage, whether you're acquiring or running your own business, it'll make a big difference in the amount of wealth that you can create for yourself and your family in the self-storage business. I hope these episodes have helped. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer. That's the software program we use as we're looking at storage facilities that we're thinking of acquiring, and we're running different scenarios based on information we get from their P&Ls and how we're going to be running that facility. So if you're not using it, I invite you to take a look at it there. CreatingWealthThroughSelfStorage.com. Click the Storage World Analyzer tab or go straight to StorageWorldAnalyzer.com. Thank you very much, and I'll see you next week.